Sometime around June 2026, SpaceX plans to go public under the internal codename Project Apex. They are seeking a $1.75 trillion valuation and looking to raise $75 billion. That amount would easily dwarf the $29 billion record set by Saudi Aramco, making it the largest initial public offering in the history of capital markets. But leaked details from their confidential filing with the SEC reveal a glaring math problem. Based on estimated revenues, SpaceX is asking investors to pay a multiple of 95 times sales. And due to massive capital expenditures, the company actually posted a $4.94 billion net loss in 2025. To justify that staggering price tag, Wall Street analysts are relying on a sum-of-the-parts valuation model. They are taking the massive entity of SpaceX and fracturing it into three distinct pillars: launch, Starlink, and the artificial intelligence division, xAI. Trying to analyze SpaceX as a traditional aerospace company fails here. The math only works if you evaluate it as three separate, heavily interdependent megacorporations operating under a single roof. The first pillar is the launch division. In 2025, SpaceX completed 165 orbital launches. They are now responsible for deploying roughly 85% of all spacecraft globally, creating an absolute monopoly in getting hardware off the Earth. By treating rockets like airplanes, landing and reusing the boosters, they applied industrial manufacturing principles to spaceflight. That reusable technology collapsed launch costs from around $15,600 per kilogram down to under $1,000 for the Falcon 9. Now they want to push that cost under $100 per kilogram using their next generation of fully reusable rockets, namely the massive Starship vehicle. Even with an impenetrable monopoly and dropping costs, the total market for launching things into space is relatively small. Expected to reach around $100 billion by 2036, the launch division alone simply cannot mathematically support a $1.75 trillion valuation. That brings us to the second pillar, Starlink. SpaceX's satellite internet service now boasts over 10 million active users globally. Early leaks suggest it is operating with highly lucrative 63% EBITDA margins, establishing it as the primary financial engine of the company. To grow this footprint, SpaceX acquired $17 billion worth of S-band spectrum from EchoStar. Because S-band frequencies can easily penetrate buildings and heavy tree cover, Starlink can beam a signal directly from a satellite to a smartphone, entirely bypassing traditional terrestrial cell towers. The math here scales aggressively. If Starlink grows from 10 million users today to a projected 100 million users in the coming years, models suggest the service could generate hundreds of billions of dollars in profit. Starlink has evolved from a niche provider for rural areas into a global telecommunications engine, and the immense cash flow generated by these subscriptions is designed to subsidize the extreme capital expenditures of the rest of the empire. The final pillar relies on the February 2026 merger with Elon Musk's artificial intelligence company, xAI. To bypass the grid bottlenecks and energy shortages facing AI data centers on Earth, the company has proposed launching 1 million satellites to generate 100 gigawatts of AI compute directly in space. Publicly, Musk has called this space-based infrastructure a no-brainer. But in their confidential S-1 filing, SpaceX's own lawyers explicitly warn investors that orbital data centers involve unproven technologies and may never achieve commercial viability. The physics hurdles are immense. In a vacuum, there is no air to cool running servers, meaning extreme amounts of heat become trapped. Add in the harsh reality of cosmic radiation, which causes bit flips and permanently destroys commercial processors, and operating high-end AI chips in orbit becomes incredibly difficult. Yet this highly speculative, physics-defying artificial intelligence premium is exactly the wildcard Wall Street is relying on. It provides the mathematical bridge to span the gap between a successful telecom company and an otherwise absurd $1.75 trillion valuation. Bringing these pillars together reveals the ultimate structure of the deal. Retail investors are effectively buying into the reliable telecom profits of Starlink, only to watch those profits fund the $20 billion capital drain of an unproven AI space stream. This dynamic is locked in through a dual-class share structure. Class B supervoting shares give insiders 10 votes for every single vote held by the public. This arrangement ensures that the public markets absorb the financial risk of failure, while the CEO retains total dictatorial control over the 9-member board and the company's strategic direction. Buying into the SpaceX IPO is not a traditional value investment. It is the ultimate test of public market faith, a multi-trillion-dollar bet that one man can break the laws of finance and physics.